Hey guys, Victor from TRADEPRO Academy, and today we've got another special video for you guys. It's going to be on the Fed hike and the Fed rate next week. We've got a huge FOMC announcement. We are expecting a rate hike. Just like George talked about in our last video, the Fed controls the United States monetary policy, and they get to decide kind of what happens with supply and demand in a monetary sense in the States. So today I'm going to talk to you guys about the rate hike decision that we do anticipate next week and how we plan on trading it and how you can take advantage of it. So let's go ahead and get started on today's video of the Fed rate hike, how to trade it, what to look for, and just a little background info on that. So first, let's go over the basics of a rate hike. So a rate hike is a interest rate increase of about 0.25% or 25 basis points usually. So like George said in the last video, the Fed does control money supply by either hiking rates or decreasing cutting rates. So the effects of a rate hike would mean that debt becomes a little more expensive, borrowing money will become slightly more expensive. Consumers will notice this in the variable rate loans. Whatever that is tied with the prime rate will change. So credit cards, home equity, lines of credit, that kind of stuff. So the current rate is 2.25%. We're expecting a hike of 0.25%, 25 basis points, up to 2.5%. This is going to happen next week on December 19th, starting 1 p.m. Eastern. So there's been a lot of pressure put on the Fed, the economy, and Powell in recent weeks. So after violent swings to the downside, there's been speculation as to where the Fed put would be. Where will the Fed step in to save the markets? Remember, markets are considered to be leading indicators in America's economy. After this, the Fed had slowly become a little more accommodative and eased the hawkish tone. So they've changed their perspective on quarterly rate hikes in 2019, as they were far from the neutral rate just a few months ago. So now they consider themselves being closer to the neutral rate than they were before. This might hint to a little more leniency to the rate hikes in 2019. Remember, before in September, October, it was pretty much all but priced in that we were going to have maybe 4 rate hikes in 2019. Along with this, the neutral rate was considered to be 3.5%, something like that. Now, with a little pressure from markets, we could see that the 4 rate hikes that were pretty much priced in 2019 have dropped down significantly. So we could see some kind of hint to that in these meeting minutes. In this next section, I want to go over some of the effects that we could see in equity markets and forex markets as this anticipated rate hike comes in. After this section, we're going to jump into the screen behind me and we're going to look at some charts and how we plan on trading the Fed. So normally one would expect rate hikes to bring bearishness into equity markets because the higher cost of borrowing effectively lowers money supply, and a rate cut would bring bullishness as it does have the opposite effect. A rate hike would be medium to long-term bearish for stocks, but we'll be talking about the announcement on a short-term basis, so it could differ slightly. Remember, stay tuned for the next part of the video. Conversely, in forex markets, the US dollar goes up on hawkish news or a rate hike. This is because the higher cost of borrowing decreases money supply and increases demand for that currency. So basic supply and demand economics. In this case, the USD. So supply goes down and demand goes up, the USD will go up. So now let's talk about the expectations for this Fed announcement. To talk about this December 2018 Fed statement, just next week on the 19th, we'll have to move over to the computer screen. So it was a pleasure talking to you guys. I hope you guys got a nice little insight on the generalization of the Fed hike, and now let's get into the good stuff. Alright guys, now that we're back to the screen, we've got a few things to show you and a few screens to show you. First and foremost, we're going to start with the screen that you see on the monitor right now. So this is the Fed rate monitor tool right here. Found this nifty little tool. Again, just to reiterate, December 19th, 2018, around 2 p.m., we've got our much anticipated Fed rate meeting. So 6 days, 1 hour, 28 minutes as of now. And this little tool is interesting just because it gives you probability of a potential rate hike, which is 2.25 to 2.5%. This is what we consider the rate hike, versus no hike at all. So as you can see here, it outlines previous week, previous day, and current. Interesting to note, last week at 72% of a hike, yesterday 77.5, and today 80.9. So
you can see that the chances of a hike look like they're increasing day by day, week by week. Again, if we go into this little chart, again, same thing, shows you the same thing, and again gives you previous data for the potential rate hike. But if we go into March, which would be the next rate hike after this, you can see 60% target no rate hike at all. This is again assuming that we did hike in December. So this would be the new current rate, assuming we hike next week. So the hike after that is priced in at 30%. Again, we can see previous days and such. You can see last month, November, we were almost 50% likely to get another hike, assuming that this hike happened. You can see it did drop significantly all the way down to 30% today. So that might be a little indication of what's to come, but again, we won't really know until the Fed statement. Once that hits December 19th, we're going to have a much clearer idea of what's going on. Just another little tool right here, the Fed dot plot. Again, a little outdated. This is June versus September, but it'll just give you a kind of general idea of what's going on here. So 2019, you can see majority a little higher here in June. There's a large cluster of sentiment around the 3% area, 3.5% even, while if we go up into September, again a few months ago, you can see less of a clutter around these rate hikes. So again, you can see there might be some easing into the potential rate hikes for 2019. Again, these are just statistics found online, so we're going to have to wait for the statement from Jerome Powell after the decision. So again, we've also got to consider US debt, tariffs, and recent sentiment and the news itself. So first, I just want to reiterate that we expect a rate hike of 25 basis points on December 19th. And we know that Jerome Powell and the Fed have been under recent Trumpian fire, if one will, for raising rates and planning to raise rates all throughout 2019. So the previously hawkish tone that Jay Powell had just a few months ago, like we showed you on these charts right here, was eased, and he and other Fed members now present a very accommodative, dovish tone. So which has seen markets rally in certain intraday sessions, but keep in mind we do expect a hike. There has been some downside pressure on equity. So again, this is the S&P right here. Some stints of bullishness on these intraday levels were from accommodative tones from dovish Feds, such as Clarita, who came out to say that they were closer to neutral rates than previously anticipated, and then Powell followed up on that, confirming that in his last meeting. So right here, this is what we're trading at today as of December 13th, around 12:40 p.m. Eastern. We're still below this 2018 open. We can't break it convincingly on high volume, and it looks like we might close negative for the year. Again, we won't know until 2019, but just by the looks of it, and we'll talk about how the rate hike and the statement will affect this whole scenario. So like I said, the Fed has shifted sentiment and has said that the neutral rate could be closer than previously expected. Therefore, one could speculate that they're trying to avoid slowing the expansion of the economic activity in the future after seeing markets struggle to the upside these past few months. Again, going back to this chart, these swings higher, weaker volume cannot sustain the bullish side, and they're quickly bought down by strong bearish volume. Right here, it's a little harder to read, but these red bars down at the bottom, these high volume bars right here, are just huge sellers absorbing all this buying. The buying happened on very little thin volume. Again, a little difficult to see. But this also suggests that even the Fed is a little uncertain of what the neutral rate actually is. So that is when the real news comes in, and we anticipate the statement that comes after the announcement. This is going to be the most interesting section out of these meeting minutes, I find, if they don't perhaps cut rates, which would be crazy. But there could also be alterations in the 2019 plans of increasing rates each quarter, like we talked about previously, which is not priced in the market. So there are suggestions of only 3 more rate hikes in 2019. They have been discussed, and it seems to be that the 4 previously anticipated are no more. So there are 2 more aspects that we must consider before we jump into our trades and our trade setups for this Fed announcement: the US corporate debt and tariffs, which were concerns in this past November's meeting minutes. So tariffs have been an ever-present topic throughout the year. The recent ceasefire between Trump and Xi agreed to over the G20 dinner seems to have solidified very little. So let's just go ahead, flip the screen to some futures on CR charts and see what the little ceasefire did to the S&P. So right here, December 2nd, right when the futures reopened at 6 p.m. Eastern, this is what happened right when Xi and Trump agreed to a 90-day ceasefire on tariffs. You can see price literally vanishes. 27.64, that's where we were trading at right before that open. And look at this gap, 27.64. Let's just scroll up here and see where the gap opened up. Gap opened up at 27.93.94. That's a 30-point gap to the upside. That's what the little ceasefire between Trump and Xi did, the 90-day little agreement at this G20 dinner. A huge rally up spiked this market on these futures, but they were quickly sold off. Even this upside, this great news of upside could not be sustained, and we had a bigger drop, which pretty much closed the gap in the coming days. So that's super interesting to note, guys. So there is fear of creation of inflation from companies that might struggle to pass on rising input costs onto customers. The tariffs would affect agricultural markets as well, so trade policies will affect actions on exports and farm incomes. If trade tensions should escalate soon or even after the allotted time of this ceasefire, they could slow the economic growth more than expected. So we did just see what happened when the ceasefire was initiated, huge pop, but even that wasn't enough to sustain bullishness in this market. You can see markets sold off very, very quickly in the next coming days back beneath the 2018 open. So imagine what would happen if these trade tensions do escalate in this current economic environment. We could see the Fed actually put into action. I don't want to scare anyone, but it's a possibility. So from a debt perspective, on the other hand, the trend of lower credit companies with weaker balance sheets increasing debt continues. So Powell said in his last meeting, I quote, "Several participants were concerned that the high level of debt in the non-financial business sector, and especially the high level of leveraged loans, made the economy more vulnerable to a sharp pullback in credit availability, which could exacerbate the effects of a negative shock on the economy, which could have been seen as dovish, limiting the number of hikes in 2019." So again, this was just a little background on the current information that we do have concerning these trade tensions, debt, and a little background on the Fed hike. But this might be the most exciting part of the video. We're going to dive into our trade ideas for this upcoming Fed meeting. So stay tuned as we're going to just switch the screen over to our futures on Sierra charts. Again, we're going to be trading futures on an intraday basis during this potential rate hike Fed meeting minutes. All right, guys, so for this upcoming Fed meeting, we see futures and futures on Forex as the primary intraday trading opportunity this December 19th, 2018. So first, let's talk about the generalizations. In this video, I want to focus on ES E-minis and Euro futures. So keep in mind that Forex futures are pinned against the US dollar. So one could trade Forex in the Forex pair Euro USD as well, or another market in equities such as the Nasdaq. So the generalization is that in a hike situation, equities such as the ES will drop and the Euro futures would drop as well because the USD would increase. In a rate cut situation, the ES futures and equities would rally and the Euro futures would rally as well, USD dropping. So right here on my screen on the left hand side, right here I'm circling this, the ES currently is trading. These are the ES futures on a 5-tick, and these are the Euro futures on a 5-tick as well. Euro futures being on the right. So, however, these are generalizations for a reason. One has to consider what is priced into the market already. Markets react best to surprises. So if a hike is priced in and a hike is announced, we would expect to see some downside, but probably not that much because, again, it is expected. It's already priced in. However, if we were expecting a hike, and anything but a hike happens, so including a cut or no action at all, we could see a sharp pop in equities initially, and this would be a huge surprise. In this case, the Euro futures would also move up with equity markets. You can see there is somewhat of a correlation between the euro and the ES futures right here. Again, you have to consider the scales, but you can see general price action is moving very similarly to one another. I also want to talk about the rate statement. So this is the real driver in the Fed rate decision and the Fed rate decision trade. So this statement outlines future Fed expectations. How will they go about rates in the next year? Will there be 3 to 4 rate hikes in 2019 or not? One must consider the Fed tone throughout this portion of the meeting. If hawkish, and they say they're going to raise rates 4 times next year for sure, maybe even more, we can see some downside open up on these equities and the euro futures alike. You can see harsh selling come down. You can see bids move down while offers move down on the ladder in both of these markets. On the other hand, if they use accommodative language in the rate statement after the decision is made, and they say that they believe they're close to the neutral rate, limiting the number of hikes in 2019, buyers would love that and eat that up, pushing equities and the euro futures higher. They would push that thing to the upside. So now I want to go back to the September rate hike just a few months ago, September 26th, when the Fed hiked by 25 basis points, and I want to see what happened there in these futures markets and why this happened. So we'll look at the euro futures and the US futures. So on the screen here, we've gone back in time and we've pinpointed our last Fed hike. So in this last Fed hike, they hiked from 2% to 2.25%, and this happened around 1 to 2 p.m. This little area here on the S&P, it dropped from these 30s down into the 27s. That's only 3 points, right? Not really that big a move, and then it actually rallied. But this is what we have to consider in a rate hike situation. So remember what was priced in. A hike was priced in. So we did get some downside, but not really. Next comes the rate statement that everyone is anticipating, and let's see what happened there. So, of course, the general jargon talking about how great the economy is what happens in this area to the upside. And then what you'll note is a very, very drastic drop right here, which began around 2:05 p.m. This is the move that was anticipated at the rate hike decision. Remember, they hiked around here in anticipation of the great economy and all that stuff that Powell was talking about. There was some bullishness, but the hike was already priced in. Now, what caused this bearishness and this huge sell-off from these 30s all the way down into the 07s? So, nearly a 25-point move on a huge drop in minutes. So this is where the rate statement comes in. This is super important. You guys got to pay attention to the rate statement that happens after the actual rate decision. So what caused this move was that Powell was super hawkish. He almost solidified the chance of a December rate hike right there and then, and the selling ensued. He also was very hawkish on the 2019 outlook of rate hikes. He did hint at potential for rate hikes in 2019. This is what causes huge sell-off. Alternatively, if we look at the euro futures, similar thing. You look, there's a lot of opportunity. Again, this is the downside that ensued right here, replicated in the euros, and it dropped even more. So these are just two different ideas here. Remember, guys, if we price in a rate hike and we get anything but a rate hike, you can see this 30-point move, no problem, right at that announcement. You don't even have to wait for the rate statement. However, if we do get the hike as anticipated, wait for the rate statement and you guys will see that there's going to be a huge move and a lot of profit to be made on futures especially. Remember, 1 point on futures on one contract is $50. 23 points, if you catch it all on one contract, is $1,150. That could be made with only $400 of margin depending on your broker. So this is a huge opportunity for you guys. Again, we're going to have to listen to the tone of the statement very carefully if there is no surprise in the rate decision itself. So this was a quick little intro on rate hikes, how we plan on trading the rate hike. And remember, guys, we're going to do it live with our members December 19th in our trading room at TRADEPRO Academy. So if you guys want a chance to jump in on this, join us live on December 19th, 2018. where TradePro Academy will be trading the Fed rate hike to close out the year and potentially decide a positive or negative finish to 2018 in the market. Again, this was Victoria from TradePro Academy. It was my pleasure talking to you about the Fed hike. I hope everyone enjoyed this video, and let me know in the comments below what you think and what you would like to see in coming videos. Do you think we're going to get a rate hike? Do you think we're going to get a cut or nothing at all? Let me know, guys. I want to hear your answers. What does the market have in store for the rest of 2018? Bye-bye.